what we can be able to explain to others as well, for them to understand and get the know-how rather than passing around wrong information. And lastly, our brethren in Gaza and Palestine, pray for Allah to protect and to guide them all in all ramifications. Al-Fatiha. Bismillah ar-Rahman ar-Rahim. Alhamdulillah. Ar-Rahman ar-Rahim. مالك يوم الدين. إياك نعبد وإياك نستعين. اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين. آمين.
Jazakallah khairan, Brother Ibrahim. Really appreciate that. And a quick, a special Jazakallah khairan for reminding us of our obligations towards our brethren in faith who are afflicted by one trial by Almighty Allah. We pray Almighty Allah, like Almighty Allah says in the glorious Quran, He would not test us more than we can bear. So we believe that whatever trial they are going through is a design by Almighty Allah, or we pray Almighty Allah relieve them of it sooner than expected. Amen. Like we said, for those of us who are just joining, we're looking at a topic today, which is Nigeria's tax regulations. That is our what are the things to learn about the tax regulations, and we have gone far and wide to get a speaker today, a peculiar speaker for that regard, because it's an expert in finance, Islamic finance, and all that. So who better to do justice to this than this person? I would be giving a short citation on the speaker for the day, and afterwards, I implore us to all listen attentively and gather as much knowledge as we can. Like I always say, Muslim is someone who knows a bit about everything. So while Lasumega has always been, advocating for us to, become entrepreneurs, be better than ourselves, we need to understand what are the implications of these new tax legislations on individuals as ourselves, and for those of us who are running businesses. So what are the implications for individuals and small enterprises? So we've tried our best to get someone who is very vast in this field. And we have, like I said earlier, a peculiar person, because if you look at the flyer, it says Christopher Otayemi, but I would like to inform you that his full name is actually Imam Christopher Otayemi. So let me just hold fast to your chairs and let me give you a short citation on who he is. So Imam Christopher Otayemi is a distinguished tax and global mobility consultant, a business process solution specialist, and Islamic finance enthusiast, who also serves as a respected imam and community leader. Imam Otayemi has over a decade of professional experience spanning tax consultancy, business process transformation, HR and payroll solutions, global mobility, and financial operations. He is known for his ability to identify high-value opportunities for businesses, solve complex tax and compliance challenges, and deliver innovative solutions that drive growth and efficiency. Professionally, he has served in top global firms. He is currently a senior manager at Deloitte, where he leads tax advisory and compliance engagements. Prior to this, he held key positions at KPMG Nigeria, WYZE Associates, and Diageo, supporting multinational clients on tax strategy, transfer pricing, and regulatory compliance. His career began with early experience in corporate restructuring and consulting at LOP Consulting, with further roles in education and public sector training, which sharpened his skills in leadership and knowledge transfer. Beyond his professional career, Imam Otayemi serves as the resident Imam and Khatib at Crescent Bearers Masjid, 1939, that was built in Lagos, where he provides spiritual leadership, guidance, and mentorship to the Muslim community. His rare combination of professional expertise and spiritual leadership has made him a bridge between faith, ethics, and business practice. A passionate advocate of Islamic finance and ethical business, Imam Otayemi continues to inspire individuals and enterprises alike on how to navigate financial, regulatory, and business challenges while staying true to Islamic values. Today, he will be guiding us on the crucial topic, navigating Nigeria's 2026 tax laws, awareness, compliance, and implications for individuals and small enterprises. Please join me in welcoming Imam Christopher Otayemi to lead us in this regard. Al-Imam, Assalamu alaikum.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Please confirm you can hear me.
Yes, we can hear you loud and clear, sir. We want to say
Okay,
Jazakallah for hiring us. You have the podium, sir.
my pleasure. So I think I'm not able to put on my video unless maybe that is disabled for everybody. Don't know. Can I?
We can see your screen. I think that suffices.
Okay,
Oh yeah, we
I
can
think the
see your
video is
video
off
also
now.
likewise. Yes.
Okay, Jazakumullah khairan. I am extremely delighted to join us to this afternoon. Alhamdulillah, we thank Allah subhanahu wa ta'ala for this opportunity. So I've been asked specifically to speak to the implications of the Tax Reform Act on individuals and SMEs. So in the next couple of maybe 30 minutes or 40 minutes or thereabouts, so I'm just going to speak to this, and I guess subsequently we have some time for interaction. If there are questions, I'll be able to attend to that if the time permits. And thank you so much for the background information provided. So we all know in the last couple of months, the President of the Federal Republic commissioned a particular committee to pull together a revamp of our tax statutes. And the Taiwo Yedele Committee comprised of a number of different people working in different segments of the economy coming together to provide input into the reform bills as then, and the bills were signed into law sometimes in June by the president. So it's now fully a law, but it's going to take effect from the 1st of January of next year. But as business owners, so we also need to understand the key provisions of these particular bodies of law and how that will impact our business. And also as individuals, how does it impact us? There are some of the provisions that, or the bulk of the provisions are actually quite positive, and we have some that perhaps in comparison to the subsisting provisions of the law, it might be retrogressive in a way. But all in all, it's from my own standpoint or my assessment of the general provisions of the Act. I think it's geared towards stimulating business and also creating enabling environment for businesses to thrive. So that's just my personal assessment. So we'll be speaking to these points. So I will give a general overview of the different bodies of law that have now been enacted. I also speak to the basis of taxation, especially for individuals and enterprises. We also speak to taxable income and income tax exemptions as provided for in the new Tax Act as we have it. We also speak to eligible deductions and new tax rates and simulation, just to bring these closer to us. So generally, we've had quite a lot just before we are having these new acts. We have different tax statutes, quite a lot actually, and some of them have been enforced for a lot of years. So we've had some of the provisions in the tax acts that we currently use at the moment that have been enforced for upwards of 50 years. So some of them, we had major amendments done in 2010, 2011, or thereabouts. But we've only had a few changes through the Finance Act that the last administration made a yearly routine. But for us to have a comprehensive overhaul of our tax system, we have not had that in anytime soon. It's been a long time we've had that. So all of the tax statute as we have it is now being revamped. So we have the Nigerian Tax Act, the Nigerian Tax Administration Act, we have the Joint Revenue Board Act, and the Nigerian Revenue Service Act, being the only 4 statutes that we're going to be operating with effect from 1st of January 2026. So where the Nigerian Tax Act specifically unifies the fiscal legislation, government taxation in Nigeria. So all of the different tax laws that we have now have been consolidated into the Nigerian Tax Act. So you know, currently we have the Companies Income Tax Act, which governs how companies or limited liability companies and the likes are subject to tax. We have the Personal Income Tax Act. We have the Value Added Tax Act. We have the Capital Gains Tax Act. We have different types of tax statutes. But all of that has now been consolidated into the Nigerian Tax Act. So that speaks to the Charging Act. So the Charging Act is the Nigerian Tax Act. So with respect to how taxes are managed and assessed, so we have the Nigerian Tax Administration Act that focuses on that. So the provisions we have there is with respect to administration. Then currently we have the Joint Revenue Board, the JTB. So that also is being revamped. So we are going to have a new revenue board. So currently we have a joint tax board, but since the revenues that will be collected by the FRS as we have it today, it's not just going to be taxes. It's going to be a whole lot of other different classes of revenue that will be collected by FRS, which is also going to transition to becoming the Nigerian Revenue Service. So the name also had to change. So it's no longer Joint Tax Board. It's going to be Joint Revenue Board with effect from January, because FRS or NRS, as it will be, will not just be responsible for collecting taxes on behalf of the Federation. We'll also be collecting any other revenue on behalf of governments, maybe stamp duties or whatever it is, all of the other revenue, including revenues that maybe the Immigration Service on behalf of the Federation. So NRS will be the one doing that. So that's why we also have a fourth, which is the Nigerian Revenue Service Act, which is going to repeal the FIRS Establishment Act as we have it today. So all of this will take effect, of course, January next year. So that just gives us an idea of what is happening with respect to the different tax statutes that have now been consolidated into 4 tax statutes. So we are no longer having like 15, 16, or 30, as the case may be. We're just going to be operating within the ambit of these 4 tax acts. So because the discussion is going to be on individuals and SMEs, so I'm going to focus largely on the impact from a personal income tax perspective. With respect to the charging of tax, the NTA provides for these categories of persons that are now chargeable to tax. So you have individuals and enterprises, you have families, you have trustee and estates, and also you have companies. So under the Personal Income Tax Act, the subsisting act that will elapse from by the 31st of December, we used to have a provision for the taxation of communities, but that is not replicated under the Nigerian Tax Act. So that's not going to be applicable going forward. Okay, so the very first point that I want to drill down on as a foundation for our discussion is the concept of residency. So we've always known that the basis of taxation of individuals in Nigeria is residency. You are liable to income tax in Nigeria because you are deemed tax resident. But that residency has really not been defined under the Personal Income Tax Act. So it wasn't defined at all. So that's why it's a welcome development that under the NTA, you have that clearly defined. So what are the triggers for residency? So the reason why we need to know that is because you are either defined to be a tax resident of a particular state or a person that is non-resident. And if you are deemed to be resident, the implication is that you are liable to tax on your right income. It's not only limited to the income generated from Nigeria. So if you have incomes from all other parts of the world, you also need to account for that, declare that, and will be subject to tax. And given certain reliefs for certain classes of other income that you bring into the country. So, but it's a resident person is usually subject to tax on his worldwide income. But you can have non-resident that derive income from Nigeria, so they are only subject to tax on their source income. So income that is attributable to whatever operations they have in Nigeria will be what they will be subject to tax on. So now when we talk about residency, it is now clearly defined how to determine that a person is resident for tax purpose in Nigeria. So the first is if the person is domiciled in Nigeria. If you are domiciled in Nigeria, then you are deemed to be tax resident. If you have a permanent place available for your domestic use in Nigeria, then you are deemed to be resident in country. If you have a place of habitual abode in Nigeria, you're also deemed to be tax resident. A particular provision that has not been in our tax law is substantial economic and immediate family ties to Nigeria. So if you have, maybe you are living outside of the country, but you have substantial, what the tax authorities deem to be substantial economic ties to Nigeria, then you'll be deemed to be tax resident in Nigeria. And the implication of that is that you are liable to income tax on your worldwide income. So for individuals who sojourn in the country for more than 183 days within a 12-month period, so that can be within one single tax year or overlaps over 2 tax years, then deemed to be resident in Nigeria for tax purposes. So this clearly defines how a resident person is determined. So if anybody fulfills any of the conditions that we have mentioned here, then the person is deemed to be tax resident in Nigeria. Okay, so for the purpose of employment income, because when we speak about individual taxation, so we have the bulk of the people that typically will pay taxes would fall within would derive income from employment. So we'll also drill down a bit on what is the way that employment income will be addressed going forward. So the income or gain or profit from an employment is deemed to be derived from Nigeria if you fulfill either of 2 conditions. The first condition is that the individual is a resident in Nigeria. So the meaning of residency we have defined if we want to flip back. So if it meets any one of these conditions, then it's deemed to be resident for tax purpose. So what we used to have under the current legislation is that it's not really tied to the individual. It's actually tied to the status of the employer. So if you have Nigerian employment, you are deemed to have an obligation to pay income tax on your employment income, but that is changing. So it's no longer tied to the employer, rather it's tied to the individual. So if the individual is deemed to be resident in Nigeria, then you are liable to income tax in Nigeria, irrespective of whether your employer is a Nigerian company or is an offshore entity. So what this clearly does is that, for instance, currently you might have some individuals that work for non-resident companies or companies that are not Nigerian companies. And because it will be quite tricky for tax authorities to follow through with the non-resident company for the purpose of collecting taxes. Individuals like that will not make a declaration for taxes and they will be able to escape tax payment. So that exactly is no longer going to be the case. So irrespective of where the employer is resident or is based, insofar you are deemed to be resident in Nigeria and you derive employment income, you will have to pay taxes on that employment income. The other condition is with respect to someone who is not resident, but the duties of that person's employment are carried out either wholly or partly in Nigeria. So that would be a case of a non-resident whose duties of employment are performed in Nigeria, either wholly or partly, and the remuneration of that individual is paid by or on behalf of a Nigerian employer. So such a person will have to pay income tax in Nigeria. The other pointer would be if the duties of employment are performed wholly or partly in Nigeria, and the income or the remuneration of that individual is borne by a Nigerian fixed base or permanent establishment or any other form of presence of that non-resident entity in Nigeria. And the other point will be if that individual's income is not able to tax in his home country. So what we used to have, or what we have under the current provision, will be if the person is non-resident, then he has to fulfill 3 conditions. If he fulfills the conditions jointly, then he will be exempt from income tax. The first is that the income is not borne by a Nigerian company. He has not stayed 183 days within a 12 calendar month, and he's from a country that has a double tax treaty with Nigeria. But that is no longer going to be the case. So this will be the condition for us to assess a non-resident for tax purpose in Nigeria. So if he fulfills any one of these, then he will have to pay income tax in Nigeria. So summarily, A non-resident will only be exempt from income tax in Nigeria if he fulfills the condition of that income not being taxable in his home country, and one of the other two being that the income is not paid by a Nigerian entity or is not paid by any nexus that offshore entity has with Nigeria, and the other being that the individual works with an employer with a startup or engage in technology-driven services or creative arts. Then the next is for us to speak to what are those classes of income that are chargeable to tax. So those are clearly defined under the NTA. So I don't need to read through, but generally profits or gains from businesses, if you work in an employment, whatever salaries or bonuses or any type of employment that you derive from that employment is chargeable to income tax. But there are two additions, or we say the expanded meaning of income chargeable that we don't have under the current regime that have now been introduced. The first is prizes, winnings, honorarium, or grants or awards. So if you get that, it's now liable to income tax. So you have to report it for tax purpose. The other is also profit or gains from virtual assets, digital assets, maybe cryptocurrencies or any one of those. So if you trade in them and you make profit, you also need to report that for tax purpose. So there are certain kind of income items that are exempt from tax. And those are the ones that I'm currently projecting. So if you have income from a federal government or state government bond, so that is fully exempt, and different classes. So if the entity is engaged in educational or religious or charitable activities, then that income is exempt from tax, except if the income is from a trade carried out by that particular entity. So you have income you receive as gratuities, and this is with respect to end of service gratuity. So it's not just another one that is paid within an employment, the person is not given, and it's called gratuity. So end of service gratuity is fully exempt from tax. So the income of military officers are now fully exempt. So the military officers will no longer pay taxes on their income with effect from 4th of January of next year. Any individual whose income is less or equal to the national minimum wage is now fully exempt from taxes. So for most SMEs, I think the majority of SMEs will have their employees fall with that category. So the implication of that is that SMEs will have a bit of a leverage such that the employees that they are going to have, if they are not earning above the minimum wage, will be fully exempt from taxes. We still talk about the tax table and the impact that we have on those who are not minimum wage earners, but it gives some level of comfort that anybody that is earning the national minimum wage or less will no longer pay taxes with effect from the 1st of January of next year. We used to have a minimum tax rule under the current regime, even though I know the minimum wage exemption was introduced by one of the finance acts about 2 years ago, as the case may be. But that gives a lot of leverage for SMEs. Okay, so we speak to the reliefs that you can access under the NTA. A number of those reliefs, we currently enjoy them under the Personal Income Tax Act. But there are also some changes happening. Some of the reliefs that you are already used to under PITA, Personal Income Tax Act, as we have it, is contribution to the National Housing Fund. Any contribution you make to that fund is fully, you can take a relief for it, meaning your taxable income will be reduced by that amount. So any contribution you are making to a health insurance scheme, for instance, maybe you have been enrolled on an HMO, they put you on a particular package and you upgrade. So whatever out-of-pocket payments you are making, you can take a relief for that. So you can always reach out to your employer and seek for a relief via payroll. So also any contribution you're making to the pension scheme, either it's statutory or is voluntary, your own personal contribution to that scheme is deductible for tax purpose. So you can take relief for whatever contribution you're making. So also is with respect to insurance premium on the life of an individual or his spouse. So you can take advantage for that. That has always been a part of our tax law. So interest on loan for developing owner-occupied residential house. So Muslims, we typically don't deal in all of this, but in case individuals that have interest on loan on a mortgage, so that also you take advantage for that of that in lowering your taxable income. So for those who are involved in businesses who are not in employment, so all business expenses which you have actually incurred wholly and exclusively for the purpose of generating the income of that business, so you can take relief for that. So you can always reduce your trading profits by that amount, and what is left is what is subject to tax. So, but what is changing under the current regime? So we have what we call the consolidated relief allowance. So it's the bulk relief that taxpayers enjoy on payroll. So it's calculated as 20% of your gross income plus the IR of 1% of your gross income, or 200,000 naira annually. So I will go over that because I know I'll be saying a lot of jargon, so that we'll be able to relate with it. So for individuals that earn above 20 million in a year, so they get 21% of their annual income free as relief. If you earn above 20 million in a year, 21% of your income is set aside. You are not being charged with tax on that 21%. So is the remaining amount after taking all other reliefs like pension, NHF, that you are now subjected to tax on. So that particular relief is no longer applicable. So CRA is no longer applicable with effect from 1st of January. So in place of CRA, we have what is called the rent relief. So rent relief is calculated as the lower of 500,000 naira annually, or 20% of your annual rent paid. So by implication, only people who pay rent will be able to take advantage of this particular relief. So house owners will not be able to take advantage of this particular relief. But what you are losing out on this, you are going to gain on the way the tax table has been structured. So we get there shortly. Okay. So with respect to benefits in kind, there is a slight amendment how that is being valued. So currently, the way we value benefits in kind, they come under about 4 different categories. The first one will be the assets that is owned by your employer. Asset owned by an employer apart from living accommodation. Asset owned by employer apart from living accommodation. So if that asset is made available for the exclusive use of an employee, so under the current regime, 5% of the historical costs or the cost of acquisition of that particular asset will be liable to tax in the hand of that employee, 5%. So that particular provision of the law has been replicated, so that's not changing. So that's still going to be the same. So if you have an asset that is owned by employer and made available for your exclusive use, for instance, you have an official car. So the official car is owned by the company and it's been assigned to you, then 5% of the cost of that car on a year-on-year basis will be deemed as an additional benefit on which you are going to be subject to tax on. So that's the first one. So that also is not going to change with effect from 1st of January 2026. It's the same. The second is with respect to assets that your employer rented. They are hired assets, and that asset has been made available for your exclusive use. So the cost incurred by an employer, the total cost incurred by an employer, is actually what will be liable to tax on in your hands as an employee. So maybe we should use a car also as an example. Instead of the company buying a car and making it available for you for your use, maybe the company rents a car or hires a car, and the car has been assigned to you. So the total cost incurred by the company in making that asset available will be what is going to be liable to tax in your hands. So that particular provision with respect to rented or hired assets made available for the exclusive use of the staff is not changing. It's still going to be the same. So we also have certain classes of benefits that you receive that the tax rule around there is not changing. For instance, the staff meal in canteen. So if your employer provides non-assignable luncheon vouchers to you, you can go to a canteen of the company to take food. So that is fully exempt from tax. You are not liable to tax on that. And that also is going to apply going forward. So if your employer provides meal for you, so that's, even though that's the benefit, but that is not a taxable benefit. If the employer provides uniform, protective clothing, or work tools and equipment, like your laptop and all of those, so that's not deemed a taxable benefit, even though it's a benefit, but it's not taxable. Related to that also is reasonable removal expenses. You are asked to move from one location to another location. Maybe you're based in Lagos and you have to be moved to maybe Port Harcourt, and you're given relocation allowance. Relocation allowance is fully exempt if it's deemed reasonable. So it has to be reasonable. So that also is fully exempt. The provision is still the same, it's not changing. So what is changing is how living accommodation is now valued. So currently under the provision of Personal Income Tax Act, if your employer owns a property, a house, and that house is assigned to you as your official house, if there's any word like that. So what operates currently is that the tax authorities will come to that house and come and do some form of evaluation. So what will have been the rental cost of this particular property in this particular location, and that particular assessment, what is deemed to be the rental value will be what is chargeable in the hands of that particular employee. But now there's a caveat to it. So what is now going to be chargeable in your hands is limited to 20% of your gross income. So if the value of that particular asset is more than 20% of your gross income, you are not going to be charged with tax on anything above 20%. If it's less than that, then it's going to be the exact value that you are not going to be liable to tax on. So that is an additional advantage for individuals that enjoy such kind of benefit. Okay, so with respect to the major changes, so I've highlighted them here. Transitioning from the Personal Income Tax Act to the Nigerian Tax Act. These are the major changes. I will drill down on a few of them. I think I've spoken about a few. The first is the tax rates are changing. So the next slide will show the tax rate. So I'm not going to dwell too much on it at this point. So the tax table, the rates, and the band are changing. So I've mentioned the fact that CRA is no longer applicable. Now we have the rent relief in place of CRA. So one other, I think, very ingenious introduction into the Nigerian Tax Act is the fact that a non-resident person may not be deemed to have a permanent or to have created a permanent establishment in Nigeria, or solely on account of employing a person resident in Nigeria. I will explain what that means and the implication. So currently, if you have a non-resident company, what I mean by non-resident, a company that is not a Nigerian company, that is based outside of Nigeria, if that company employs a person resident in Nigeria, a Nigerian to work for them, the fact that that individual that has been employed is in Nigeria can create what we call a permanent establishment for that offshore entity, meaning it's going to drag, there's a possibility that the presence of that Nigerian as an employee in Nigeria will drag that offshore entity into paying income tax in Nigeria. So what that does is that it serves as a disincentive for non-resident companies to want to employ Nigerians, because who wants to come and pay taxes in Nigeria, especially if the operation is not based in Nigeria. And we see certain other countries, maybe in India, you see companies that are in the US or in the UK, they will tap into the cheap workforce that you have in India. The majority of the workforce are based in India, but they are servicing or the market they're servicing is actually in the US or in the UK. So companies like that, because the way their own tax statutes have been designed, it doesn't drag the company into the Indian tax net. So they can easily employ Indians to be working as maybe customer service agents or whatever the backend services that they want to provide. They will set up structures or certain I'm trying to get the word, it's a particular word we use for it, in India, such that they will be servicing the US. So it is to take advantage of such opportunities, because Nigeria also has a large a percentage or a large workforce that are yet untapped. So if you are going to have non-resident companies take advantage of the cheap workforce that you have in Nigeria, you can be working for a non-Nigerian company and be servicing what's it called, jurisdictions that are in Nigeria. If that's the case, then the offshore entity is not necessarily dragged into the Nigerian tax net. So it gives them that impetus and that encouragement to want to hire Nigerians to perform services for them targeted at other markets. So that's what that provision is saying, that the fact that you are employing a Nigerian or a person resident in Nigeria, it does not necessarily create a permanent establishment or a tax nexus for a non-resident entity in Nigeria. So that's what that does. So it's a good introduction into our tax status. So it allows opportunities for our young population to have opportunities to work with non-resident companies insofar the targets for such services are not Nigerians. So one other thing with respect to the Nigerian Tax Administration Act, under the PIT, every taxable person has an obligation to file his individual returns annually by the 31st of March or 30th, as the case may be, 90 days into the new year. But under the NTA, that particular timeline for filing the returns is not specifically mentioned. Even the obligation to file return is still there. So we expect tax authorities will issue some clarification with respect to that. One other change that is happening, even though that is not revenue related, it's capital in nature, that is compensation for loss of office. So under the current regime, the Capital Gains Tax Act, so if you have an individual, an employee of the company whose office has been made redundant, it was sacked, and some form of compensation is paid to that individual, any compensation paid up to 10 million is exempt from tax, is fully exempt. So you are not going to pay taxes on it. Any amount in excess of 10 million is chargeable to tax at the prevailing rate, which is 10%. So the tax rates, the capital gains tax rate is 10%. So that also is changing. So what is changing is that the threshold has now been moved from 10 million to 50 million. So any payments made to an employee whose office has been rendered redundant, he has been sacked, it's not voluntary retirement. So anything that is paid to that person in compensation up to 50 million naira is fully exempt from tax. So you're not going to pay any tax on it. But anything in excess of 50 million will be liable to tax at the prevailing personal income tax rate. So it's no longer 10%. So it's going to be at the same rate as all other allowances of that individual will be subject to tax. So we have mentioned the fact that digital assets or income or gains from digital asset are not chargeable to tax. What if you engage in a speaking if you have a speaking engagement and you are paid honorarium, so you have to report that also for tax purpose. That also is changing. And I've spoken to the last point, which is how we value living accommodation. So let's move on to the next slide. So this speaks to the changes to our tax rate and tax band. So under the Personal Income Tax Act, we have the rates specified under the green charts. So but that's changing. So under the NTA, the first 800,000 naira an individual earns in a year is fully exempt to tax. Is fully exempt from tax. So first 800,000 of your chargeable income. So after you have taken out all of the reliefs from pension payments, NHF, and all of those, the first 800,000 of your chargeable income is assessed to tax at 0%. So everybody gets a relief at that point. So what you are losing out on the CRA, you are gaining from the first band of the tax rates. So you have 800,000 subject to tax at 0%. So the majority of people, low income earners, will fall within that bracket. So the intent of the drafters of the law is to ensure that low income earners don't pay taxes at all. Middle income earners will pay slightly lower than what they're currently paying, or some of them will pay slightly higher than what they are currently paying. And high income earners will pay a fair share, will pay significantly higher than what they're currently paying. So that exactly is the intent, and that's what this law is seeking to achieve. So the last thing I will mention is just to do a simulation and project a simulation so that we can bring this a bit closer to us. So for individuals currently who earn 5 million naira annually, so we have done a simulation that compares what the tax payment is under the current regime and what the tax payment is going to be under the new regime that will take effect from next year. So if you earn 5 million annually, and this simulation has been done to compare between the CRA you're enjoying currently and the rent relief you're going to enjoy going forward. So we have not taken into consideration anything that relates to pension relief, NHF relief, or any other relief that you might enjoy. So it's just basically a comparison between CRA and rent relief. So currently, if a person earns 50 million, 5 million annually, you will pay taxes of about 704,000 annually. So if you transition to the new regime, you're going to pay slightly lower than that, 636,000. So that is roughly 10% reduction in your tax payment. If your income is 13 million, currently you'll be paying taxes of around 2.2 million. Under the new regime, you pay slightly lower than that, about 8% reduction. You pay 2,555,000. So if you're earning 25 million, so that's where you start seeing some slight marginal increment from what you're currently paying. So if you earn 25 million annually, you will be paying 4.53 million in taxes annually. Under the new regime, you will pay slightly higher, just 43,000 higher than what you're currently paying. So about 0.95% increment in your taxes. You also see the effective tax rate. So it goes up from 18.13% to 18.30%. It will earn 75 million annually. So currently you'll be paying something in the region of 14 million in taxes. Under the new regime, we'll be paying as much as 16.5 million. So that's about 18% increase in the tax we're paying. So the effective tax rate will be moving from about 18.68% to 22.7%. And we've done this even for the person that earns around 900 million annually. So you can see a sharp rise in the tax payment. Currently, the effective tax rate for that individual is around 18.94%. But under the new regime, we will be paying as much as 24.76%, almost closing in on 25%. So that gives an idea of what the person will be paying. So currently, it's paying roughly around 170 million naira in taxes. Based on the new regime, it's going to be paying over 200 million in taxes annually. So that shows a sharp increase, about 31% increment in taxes. What that exactly is the intent of the drafters of the law. They actually want the high income earners to be the one to bear the burden of taxes and relieve low income earners and middle income earners from the burden of taxes. So we just expect that in implementation or administration of taxes, they will be able to do this the way it's intended, so that we don't have all these other issues that we have always been having with respect to the administration of taxes in Nigeria. So that just gives an overview. I guess maybe once we go into the question and answer session, if there are any specific areas that any of the participants would want me to speak to, then if I have the opportunity, I'll be able to speak to that. Jazakumullah khairan. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Jazakallah khairan, Imam. Like I was just glued to my screen, looking at the figures, trying to see how it affects me, and I believe my colleagues have done the same. So let's have questions. Do we have questions? I know I have questions, but I'd like the listeners to lead first on this regard. We have questions because I know there are a lot of questions to ask as regards these new laws and how they affect us. The Imam has done a summary about how they affect us in terms of those of us who are employees, and for those who are also own small and medium enterprises, how they affect you in terms of whether you're a resident company or whether you're a non-resident company. So I would like us to ask questions. What do we think? Is this going to be, in general, is this a plus? Do we think, because we all know what the country is going through right now, how people are finding it hard to survive, and is this a plus? Do we anticipate that in the coming year this will make things better for Nigerians, or do we think this is just calculations that really do not add up to anything? So please, let's ask questions. You can indicate by raising up our hand in the comment section so I can pick you. Questions. Or do we think what the Imam said was all jargons and we found them hard to understand?
I think people are raising their hands.
Okay. Malam Ibrahim, you can help in allocating
Okay, so
sessions.
we have 3 hands up, so we can take Mr. Idris first. You go first. You can
Okay, Mr. Idris. You can unmute yourself, sir.
Naam, assalamu alaikum to
Wa alaikum assalam.
Thank you very much. I really appreciate the session. Apparently, I got the message from a friend, and unfortunately, I joined quite late. So because I've been very busy with some other things, so I saw the message very late. So fortunately, I met some other part of it which interested me, which was some of the questions that has been boggling me. However, my own question, I don't know if this has been addressed, you should pardon me, is about those freelancers, those who are doing freelancing and trying to incorporate it to their locally registered business at home here, and they occasionally earn in foreign currency. How does this affect those doing overseas job freelancing, while they also have their local company here, trying to synergize the together? What do you advise? Is there a way to synchronize? I don't know if there is a better term to use. Synchronize the foreign earnings with the local business that is yet to be thriving, because the person is trying to make the business thrive, but however, it has been very difficult to get that started. But yeah, there is this tax regime that is trying to ensure everybody are responsible. However, we hope that the government too plays their own part after we pay all this money to them. So what do you advise? What do you advise with someone earning foreign currency from freelancing, normally going to a private account, but wants to see how it can go to a corporate account? Or do you think it should remain in the private account? Is it taxable? How does he get it taxed? Will there be an issue with the person, or the person just please advise me generally on this? Thank you.
Okay, thank you so much, Idris. So I had mentioned that, so if you are deemed to be tax resident in Nigeria, then you are liable to income tax on your worldwide income. So you are not just assessed to tax on income sourced from Nigeria. So if you pass the residency test, you are not domiciled in Nigeria, you have substantial economic ties to Nigeria, you have a place of abode in Nigeria, a place available for your domestic use, and a few of the other conditions for residency trigger. So once you are deemed to be resident, you are liable to tax on your worldwide income. So it's not that the tax system in Nigeria is not as ripe or mature as you have outside of the country. That's, I mean, you have tax authorities that are able to track all of your income streams. So what ideally you should be doing is to make a declaration of that income. So if you have made a declaration of income, it's possible that in consolidation of your income, you might not even reach the threshold for any tax payment. And if there is any tax due, the way the drafters of the law have put the tax table is such that low income and middle income earners will be relieved greatly. Low income earners won't even pay taxes at all. So for most people, and when I say most people, those who earn 25 million or less, it's either you're not paying taxes at all, or you are paying lower than what you currently pay under the current regime. So it's only a few, maybe just within that 25, 26 million annual income bracket, that you'll be paying slightly higher than what you're currently paying. And that's if you make full declaration. And we're getting there, because the tax process in Nigeria is getting so automated. A number of the tax authorities, for instance, Lagos Internal Revenue Service, Rivers State Internal Revenue Service, I think FCTRS also is trying to come on board with respect to automation process. A number of the other states' internal revenue services have automated the process of filing returns. But it's also going to get to a point that even in the process of administering taxes is going to be automated in a way. A number of those tax authorities have access at the back end to information. Even you have opportunities for sharing of information between countries. So that impression that maybe tax happening, a number of them actually do know what is happening. So if you earn such income, there's nothing that says you cannot earn income from abroad. And like we mentioned, there are even provisions in the current or in the what's it called, the Tax Act, as we're going to have it from January, that encourages even non-resident companies hiring Nigerians, insofar the target market is not the Nigerian market. It's not going to drag the offshore entity into Nigeria. But if you earn income from abroad, you also need to make a declaration. And that's why we even said there's been an expanded scope of income chargeable. There's a problem around how we tax authorities track digital currencies, for instance. So if you trade in cryptocurrencies and you have gains from that, you are supposed to report that for tax purposes. So, but within the framework, you have an obligation as a citizen to make a declaration of all those income. If you don't know how to access yourself to tax, you can speak to your tax consultant, or you also speak to the tax authority as the case may be. So, and there are other sources of income too that if you bring in into the country through government approved channels, you are going to get tax exemption. So it's not all classes of income that you earn that is actually taxable. So there are certain income that if you earn them from abroad and you bring them through government channels, you're going to get tax exemption. So whether or not to report or to receive the income under your individual account, or you want to report it under your company account, will have different tax implications, because individuals are not subject to tax at the same rate as companies. So if your company is deemed to be a small company, you don't have revenue up to 100 million, for instance, or you don't hold assets in excess of 250 million, you are not going to be paying taxes. I mean, the company is really, that company is deemed to be a small company. But if you're a large company, if you're any than that as a limited liability company, you will be paying taxes at 30%. So if that's the case, if you are reported as a limited liability company and you're paying taxes at 30%, compared to if you pay taxes maybe at 20% under personal income tax, that will impact how you want to report that income, or how you want to receive such types of income. So it's all part of planning.
Jazakallah khairan. Brother Idris, I hope you understood that.
Yeah, I think yeah, it's quite complicated, but I think I have a better understanding now. At least.
Okay. Yeah, Brother Taufik, you have the floor. Brother Taufik will look at you. You can unmute yourself now.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi
wa barakatuh. First of all, I want to say Jazakumullah khairan for this opportunity, because I've more or less been the one asking series of questions on this platform. So for this opportunity, I also say thank you to Last Mega, and also say a very big thank you to our guest as well. So my own question is, first of all, one, how will government the tax authority, first, how are they going to get these people that are taxable? One, is it through their accounts? Hello? One, is it through their accounts? Maybe inflow or outflow from the account. That's how they are going to get it, that this person is taxable or not taxable. For example, somebody that runs a small business, maybe a POS operator, for example, that runs a POS business. And in the POS business, inflows and outflow, definitely maybe not even his own fund. You can even have in a month an inflow and outflow of almost running into like 10 million. But this one that does what? The person's money. So how would they going to tax that one? That's number one. So number two, for Lagos state government now, and I say everything is going to be collected by maybe one authority. Is it going to be the federal government that will be collecting tax, or the state government that will be collecting tax? We don't know. Because presently, small business owners, people in shops and the rest, Lagos State Inland Revenue Service already go to most of them. They have their record that they have said, and they collect tax from these people. So is it the federal government that will come from January to come and start collecting tax from them, or they will continue with the state government as the process has been going on before? That's number two. And number three.
So I don't lose touch of the questions. Can I take those ones first, and you can ask the third question, so I don't miss my miss any one of the questions. Okay, let me start with the last question. So so with respect to how taxes are administered, so that's clearly spelled out. So we have different revenue or agencies of government that collect different types of taxes. So when it comes to personal income tax, tax on individuals, taxes on enterprises, partnership. So is the tax authority in the state where that individual or that enterprise is situated. That's the tax authority that will administer that tax, or where the principal office of the partnership is based. So that's where the taxes or the tax authority within that jurisdiction will take responsibility for it. So that's not changing. So taxes on employment income will be taken by the tax authority in the state in which the individual is resident. So if you're a resident in Lagos, if you're deriving employment income, LRS will be still be the one responsible for collecting the tax. So if you're a limited liability company or you run a limited liability company, the tax on that, on the operations of that company, goes to or is administered by the NRS, the Nigerian Revenue Service. That's FRS that's changing it. So a number of all other, you have some of these other agencies of government that collect revenue, like immigration collect revenue, customs collect revenue. So all of them have means of collecting, or they have designed certain other ways for collecting revenue for government. But that is no longer going to be the case. FRS or NRS, as the case may be, will be the sole revenue collection agency of the federation. So custom will no longer be collecting revenue. Immigration will no longer be collecting revenue. NRS will be doing that for them, including collecting taxes on corporates and all what's not, or non-resident entities, as the case may be, or non-resident person, as the case may be. So that is not that's not changing. It's just the different. You just need to know which class of tax, then you'll be able to situate which of the tax authorities that will be responsible for collecting that. So with respect to your first question about how tax authority will be able to track. So first, you have an obligation to make a declaration of your income. So if you earn income, a taxpayer is required by law to make a declaration of his income. So if you don't make a declaration, the tax authority is at liberty to assess the tax on a best of judgment basis. So they can issue assessment on a BOJ basis. And the tax authority, the point I was trying to make the other time is that they have information actually to be able to assess what will have been the level of your income in any particular year. So the best would be make declaration, because oftentimes tax authorities also will overbloat the assessment. And if you're not showing them or giving them actual declaration, then they are at liberty to issue assessment on a best of judgment basis. So they have access. We have had instances that an individual will claim that he doesn't have any income, is a director in the company. The company pays him sitting allowances and director's fee, and they remit withholding tax to the state government, LRS for instance. And the individual in his declaration of income says he didn't even earn any income during that year. And they just went to their database and they showed it, but this was paid as withholding tax on the director's fee that was paid. So how then will you claim that you didn't receive any income? So they have all of those opportunities, and there's going to be a lot more synergy between all of those tax authorities, whether it's Lagos State or any other state, or even the Nigerian Revenue Service, as the case may be. So most likely they might even be doing joint audits. I know they've been a particular initiative at some point for them to be doing joint audits, but they have not really harnessed that opportunity. But these new tax laws is going to bring them even much more together. It is going to be a lot of synergy in the operation of the tax authority. So you expect that as you transact businesses, they will be able to track. Even under the BOFIA, the act that manages how banks and financial institutions operate, there are certain level of deposit that if it comes into your accounts, the banks have to report it. If you are not reporting, you need to report. So there are certain transactions, if it comes into your account, they will report. And the tax authorities have opportunities also to get that information. They can request for such information. Okay, in a particular month, if any individual account receives something like maybe 50 million or 100 million naira in a month, the tax authority can request for details of such transactions. And so these are some of the avenues for them to track and to see what is actually even happening within the business space. So, but primarily, taxpayers have an obligation to make a declaration of their income to the tax authorities. I hope that answers the question.
Thank you so much. In fact, you have really clarified the major part of what I want to ask. That is, state government revenue service is the one responsible for any business that is resident in that particular state. Because the write-up that actually bring up this issue of this tax on this platform says they will go directly into your account, that your account, they monitor what is going in and coming in and out of your account. So whatever is going on, they can start taxing. That's what I'm not saying. For example, that is doing somebody that is doing the business of just like 500,000 naira. 500,000 that is using to run the business, coming in and going out, inflows and outflow, it can be more than that because the money is being turned over. It's coming in, it's paying for it, buy something, pay again. So it can even be up to 10 million naira in a month. So you understand?
Yeah, so that's why for SMEs, the primary thing is that you have to keep records. So you are not taxed on your turnover. It's not your turnover that is being subject to tax. So like if you follow through when I was presenting, there are certain business expenses that you have to take relief for. So you have your revenue, you have expenses that you incur in generating that revenue. You back at your expenses. So yes, the tax authority or the drafters of the law are not expecting you to pay taxes on your turnover or your revenue. No, it's not your revenue that's subject to tax. It's your income, it's your profits that is subject to tax. So you've made there are certain inflows that actually relate to the revenue you have generated for the business. There are expenses that you have incurred in generating that revenue. You back out your expenses, your employee costs. You pay salaries to employees that work with you. So they are part of the expenses that you have to back out. So in so far the expenses that do not relate to your own personal expenses that you just want to charge to the business, those ones will be disallowed. So maybe you are running a business and you are taking a part of your profits for your personal use. So we won't take that as an expense for which you need to take a benefit from. So we're going to write that back because those are not business expenses. So they are not wholly or reasonably incurred for the purpose of generating the revenue. So all of those business expenses will be backed out, and you have opportunity also to take advantage of capital allowances on your assets. You have bought a vehicle, and you're using the vehicle for the purpose of your business. So because we don't recognize depreciation for the purpose of taxation, so we rather do capital allowances. So there's the way those ones are calculated. I don't want to complicate things with our jargons. So, but all of those assets, as they wear out, you also take advantage of the capital allowances to reduce your taxable income. And it's on the taxable income that is now subject to tax. So it's not your revenue that is subject to tax, but the revenue only gives the tax authority some comfort that yes, there's business happening here. So there's an expectation of a large profit. But in case you are having a lot of turnover, monies are going in and monies is coming out, and you're not paying taxes, and they're asking you, say you're not doing business. How are you not doing business? You can see inflows. So primarily, it's not the inflow that is to be taxed. It's just an indication that there's business happening and there is a possibility for you to have generated profits from that business. I hope that answers the question.
Thank you so much. That will be all for now. Jazakallah khair.
Okay. Answer.
Yeah. So, Mr. Adedeji Ogunaike, you have the floor, please.
Okay, thank you so much. I'm Ogunaike Adedeji. It's an opportunity to join you on this platform for the tax talk. I really appreciate that. I saw the flyers from a friend of mine, and I just wish to join. Can you hear me?
See me.
So, on the issue of the reform, I just want to ask that every average individual are not ready to pay tax, especially the so-called businessman that they don't keep record of their accounts or their books. And with this new reform, Sir, what do you think that it could be a benefit from the old one to the new one, from the old act and this new reform act? What would be the benefit for an individual to be able to, because I know there's so much difference between the old rate of calculating tax and the new one. What would be the benefit for them? At the same time, the criticism on it. Then my second question is, I want you to emphasize more on the issue of rent. The issue of rent that you said 20% or 500. I want you to emphasize more on that. And the third one is,
Okay.
maybe we can get the slide after the lecture, sir.
Okay,
Thank you,
I will
sir.
try to, yeah, because I'm actually working or projecting for my office laptop, so I'm not able to pull that out of my laptop, but I'll say a way of getting something across. Okay, so with respect to the rent relief, so rent relief is calculated as the lower of 500,000 annually or the annual rent paid by that individual. So you cannot take benefit of anything higher than 500,000. That would mean a person that is paying a rent of around 2.5 million, 20% of that is what we need 500,000. So that's the maximum a taxpayer can enjoy in rent relief. And what I said the other time is that it's only available for individuals that actually pay rent. So if you own a house, you can't take advantage of rent relief because there's no rent that you will have paid in that instance. So that's about that. Then the first question, you were asking about what benefits is there for taxpayers moving from the current regime to the proposed regime. There are a lot of benefits, and I spoke about a few of them. Actually, the intent of and low income earners specifically. That's the intent. That's what exactly, because in other climes, it's the first or the top 1% of the top earners are the ones that will pay as much as 95% of the taxes. So why tax subject someone that is even barely managing to earn minimum wage? Why subject him to tax? He has to pay minimum tax. Even for companies, you have minimum tax for companies. Company that is making the losses. Say a company has made a loss, and you insist that you have to pay minimum tax. So from where do you expect that company to pay that minimum tax? It's not going to be from, because it has not made profit, it has made a loss. So it's only going to pay that minimum tax from its capital. So it doesn't make any sense that we keep having all of such provisions in our laws, and that's why those things are changing. So for small businesses, so small businesses have now been defined as a company that has annual turnover of about 100 million or less. So most SMEs will fall within that bracket, 100 million. So most companies can, or most SMEs or enterprises, or even limited liability companies might not make as much as that in turnover in a year. So that exempts them from taxes, and it allows them opportunity to scale up their businesses. And for most SMEs, they typically their workforce is usually people within the minimum income, minimum wage bracket. Maybe a barber will not hire someone that's going to pay 100,000 naira or more than that in a month. Maybe he's paying the person maybe 40,000 or 50,000, as the case may be. The current national minimum wage is 70,000. So it means anybody that is not earning up to that will be fully exempt from tax. And even if you are earning above that, you most likely might not even pay any taxes at all, or even if you have to pay taxes, it's going to be quite minimal. So that's the intent. And for me, for my evaluation, I know there are certain other provisions that perhaps we could have had a bit more, they could have been thought through a bit more thoroughly before they were included. So, but largely, if implemented the right way, it's a positive development for our taxes.
Jazakallah khairan, sir, for that explanation. Yeah, I feel like you said, and even with the table you summarized for us, it's only the big boys who will be paying more. So if your annual income is above 25 million, then you have to start worrying. Of course, we all hope to be in that bracket, earning above that amount. But I think the take home from what you've all said is there's that obligation on all individuals to rightfully want to declare what you earn. It's only when you do that that is when the country will move forward, because you declare what you earn and you pay what is your due, and those things are now actually used for development. But I think, like I always say, the fear of most Nigerians is, okay, I play my part by paying that we don't want to pay our taxes and all that. And we hope these things help. Do we have any other question before I ask my own question? Okay, since nobody's asking, sir, my own question goes thus. When you mentioned about non-residents, yeah, I really picked up that we have countries who are employers who are not in the country and who are employing Nigerians, and now those employers have to do you have to pay tax. Is that not going to be like a discouragement to them that, oh, now I have to pay tax to Nigerian country when this was not existent before? Will these countries not stay back and not want to employ Nigerians, knowing that if they, with this new tax law, they have to pay Nigeria tax also?
No. It's actually the opposite, and that's what I said was introduced. So what we have currently under the current regime, if you employ Nigerians and you are not a Nigerian company, there's a likelihood that your employing a Nigerian is going to create a fixed base for you or a permanent establishment for you, meaning that the fact that you have Nigerians working for you might drag that offshore entity into the Nigerian tax net. And that has always been a disincentive. So offshore companies will really not want to come and employ Nigerians. They would rather go to India, because also you have a large population, cheap labor force. So that's why you see sometimes maybe you travel outside of the country, you want to do customer care and some other things. So you have someone pick up your call, and he's in Hyderabad in India, and is responding to you. He's servicing clients in the US, but it's based in India. So because the Indian tax law does not drag a non-resident entity into the Indian tax net solely on account of the fact that they have employed Indians to be working for them. So that exactly is what is now being introduced. That, okay, if you're a non-resident entity and you feel like you want to employ Nigerians to service your clients based in other jurisdictions, not based in Nigeria, then there wouldn't be a problem. You can employ them. That necessarily will not drag you into the Nigerian tax net. So you have other Nigerians that take opportunity of that particular situation. So they get employed by non-residents. And the fact that they are residents in Nigeria, they have an obligation to pay their own taxes, not the corporate tax of the offshore entity. So that's the clarification I'm trying to make. So it's a positive one. Now you're going to have more non-resident companies tap into the Nigerian labor force. You have more non-resident companies employing Nigerians to work for them, but solely targeting operations for other jurisdictions, other countries, as the case may be.
Okay, I think I get it. Now that means the company will not be liable to pay tax, but the individuals
Absolutely.
earning
The individual will have to pay
country
taxes. Yeah, you are
tax.
resident, you are earning income, you pay. But the offshore, the company will not pay corporate taxes solely because the company has employed Nigerians to work for it. So that's the point we're trying to clarify.
Okay, I was likening it to the brother who asks about freelancing, all those Upwork and the likes, so that it doesn't become sort of like a discouragement for them to give jobs to Nigerians. Jazakallah khairan for this wonderful session. It's eye-opening.
Sorry, sir.
Yes, please.
Yes,
Yes,
sir.
please, go
What
ahead.
about the issue of economic presence, like what you are talking about, when there's significant economic presence for the
Yes.
company, will the company be liable?
No, it's actually individuals. So if an individual has significant economic, economic ties to Nigeria has really not been defined. So we expect maybe tax authority or the Minister of Finance to issue some maybe communication in that respect. So what constitutes significant economic ties to Nigeria? Maybe you have some investment. At the moment, so there's really nothing that has been put there in the public space to define that. There was a time too that we had a significant economic presence rule in our tax law. It was defined for corporate tax purpose, for personal income tax purpose, the minister didn't issue anything, and people were just silent about it. So as of now, we don't know the intent of the tax authorities on how they want to define what constitutes a significant economic presence. But relying on what is done in other jurisdictions, usually if you have an investment, very huge investments in a country, it might trigger that particular clause.
Okay, Jazakallah Karen. Once again, Jazakallah for the session. I will now hand over to Brother Ibrahim Doe to give us our appreciation.
Assalamu alaikum warahmatullahi wabarakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
A big Jazakallah Khairan to Imam Christopher Atayemi. I mean, we beckoned on you and you actually answered us. We really appreciate, and on behalf of the Lagos State University Muslim Graduate Association, Last Omega, we thank you for honoring us and for taking time to enlighten us today. I mean, on this the new tax laws that begins in January. It's been of great concern to our members, and I personally also, I mean, but with this lecture, I think it's giving us a great insight into what's coming in 2026, you know, and we can only pray that Allah subhanahu wa ta'ala increasing in knowledge, preserving in goodness, and also reward you abundantly for your service to the Ummah. We also want to appreciate all members, participants who have also joined this session. We pray that Allah accept it from all of us as an act of ibadah, and also make it a source of benefit in our worldly affairs and in the hereafter. Once again, I'm sure that we'll be reaching out to you, inshallah. I mean, for some of our members who have one or two tax related issues. I mean, I'm sure you also might be beneficial to us in terms of consulting you. Inshallah, we'll get back to you on that. So we say Jazakallah Khairan once again. Thank you, everyone.
Jazakallah Khairan.
Wa alaikum assalam wa rahmatullahi wa barakatuh. We've come to the end of the program, and we would like to close with the dua. I'd like to call on Brother Abdulghani Adetunji to give us a rounding up dua.
Okay, alhamdulillah. We give thanks to Allah subhanahu wa ta'ala for this opportunity. Our prayer is Allah will make it to be hujjatan lana wala alayna. May Allah make it to be hujjah for us and not against us. Indeed, this knowledge, we know it's one of those things that will be of positive remarks to us. However, implementation of the knowledge is where we need to be very careful with. As we pray Allah subhanahu wa ta'ala will guide us aright. So it's very, very sad that we Muslims, we fall in the negative part when it comes to implementation. So declaration is something every one of us, we think we can always find a means of going against the authority, which we know that Allah is al-Basir. Allah indeed sees us. Our prayer is that Allah will make this to be hujjatan lana wala alayna, and we'll have the opportunity for us to be able to hand so much in terms of our worldly and also akhirah, because others may only want to do theirs based on their worldly affairs, but we know that as Muslims, we have Kiraman Katibin, that indeed they are humble writers. If you declare wrongly, they have a very better understanding of what you've done, and the day is coming in which we know that our deeds is going to be weighed. Our prayer is that Allah subhanahu wa ta'ala will make our good deeds to outweigh our bad deeds. And indeed, our self-desire that will always make people to go against whatever their dealings are. We pray Allah subhanahu wa ta'ala we protect us against this hawa. And we know that if we are able, indeed, the reward therein, if we're able to overcome this, is that our prayer is Allah will admit all of us in Jannah. To Las Mega, we say Jazakumullah khairan to you, to our beloved brother that indeed have taken his time to impact on knowledge. And I pray Allah subhanahu wa ta'ala will also make this to be that which will be of benefit to you. سبحانك اللهم وبحمدك واشهد ان لا اله الا انت ونستغفرك ونتوب اليك والسلام عليكم ورحمه الله وبركاته.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Jazakallah Khairan, Brother Abdulghani, for that wonderful dua. We've come to the end of this program, and we close with the dua. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullah.